It's time to take a look here at the commodity trade from a weekly perspective, and to do so, we're going to talk with Darrell Holaday, Country Futures, Frankfort, Kansas. Darrell, surprises in the USDA data kind of send this grain complex into a little bit of a tailspin on Friday, giving the corn and the wheat against the soybeans. Meanwhile, livestock side of the trade, the quarterly hogs and pigs help keep them in the green. Overall, what did you make of the week's trade?
Well, if you start first with the grain, we just capped off a week of volatility with it, like you said, a crazy report. I don't know if they were way out of line. The one number that caught most everybody off guard was the wheat production number, which the wheat production number, this is their last production estimate. They didn't make one in September. They make one in August, and they make one in here in September, along with the grain stocks report. And so that was the shocker, in that they lowered the production from August to 120 million bushels. That's a big revision down. And now they'll make another revision in January, but basically they're done for now. That was really, really bullish. Of course, that took wheat up sharply. But the bearish side of this is the demand side, because if you're going to lower production that much, you'd certainly expected that the September 1 stocks number would have been well below what people's estimates were based on everybody else using just about the same production number, because the average trade guess was very little change in the production. The stocks number was still plenty high. It kind of indicates just how poor the demand's been in the first quarter in the wheat in the overall U.S. wheat market, and that is a concern. And so we're going to see a lot of adjustments in the WASDE. We saw a big rally, but it came well off the highs on Friday. Now, prior to that report, we definitely saw some support throughout the week because of the Russian-Ukraine situation, the continued threats, the referendum, the idea that the export corridor is going to maybe disappear that's coming out of Ukraine. So that supported wheat throughout. Then we get this report. But once again, I think it ought to be at least mentioned that we did see the market come well off. It went up, the December Kansas City wheat market went above the $10 initially off the report, and then ended up closing back below the $10 level. But still a solid move across the board all on the wheat. Now, we go to corn and beans, somewhat of a different story there, completely opposite. Of course, no production updates for the crop year. This was just the September 1 inventory, two totally different numbers, and that you had the corn number at 1.38 million bushels, which was about 100 million bushels below expectation, 120 below expectation. So that was supportive. So that the market went with that. But the problem with what you have with inventory numbers like that look back at September 1 is the market's already traded that. We've traded through those tighter stocks, and it certainly explained why the basis levels were so strong as we got dropped into new crop, and they continue to be strong, and why the pipeline seems to be was empty. But once again, the market came well off the high early. Matter of fact, on a week-to-week basis, we barely closed higher on the week. On the corn side of things, we continue to see pressure from the harvest pressure, and we're seeing ethanol weakness, and we don't continue to see very poor, slow growth, but we see very poor export numbers or sales numbers for the corn and the wheat, as we mentioned earlier. So those markets kind of worked outside of a soybean complex that really got a hit with a big increase in the Indian stocks versus expectations, 279 million bushels, up substantially. And what they did is they went back and revised last year's soybean production up about 30 million bushels from where they were. So this really caught the market off guard. It was negative. We took soybeans lower, and they basically stayed lower and lower on the week. They basically lost about 40 cents on the week or on the day on Friday. So most of the weekly loss coming on that Friday. So it's really changed the dynamics in that we had more ending stock. We had more stocks September 1 than what the market thought we did. Although, again, you struggle with the fact that we still saw record rate basis levels as we came to the end of the crop year. So once again, these numbers are hard to explain. What USDA did to justify that stocks number is they had to go back and raise last year's production number, and that's how they made the numbers work. We got to remember that's what USDA. That's why the stock numbers are important, especially the last one. Is that they take that and they just add back and say, well, we've done that and we've crushed this many beans, we've exported this many beans, then we had to start with more beans, and that meant the production number had to be higher, and that's the adjustment they made. And so beans down significantly on the week, corn basically steady, 20 to 30 cents on the week. December corn closed at 6.78, up a penny. March corn two higher at 6.84. November soybeans down 66 on the week at 13.65. January beans 13.76, also down 66 on the week. December Kansas City wheat 42 higher at 9.92, and new crop July 22 higher at 9.54. Now on the livestock side of things, kind of a disappointing week as a whole, no question about that. things come off their lows. The hogs came off some midweek lows, but they were pressured hard because the market gave up a lot of ground, especially on the front of the market. But we even saw it in the deferred contracts as the cash index continues to work lower. Got the hog and pig report out on Thursday afternoon, which I think I felt was supportive. I think the industry saw supportive as categories down 1%, showing no real significant expansion at all. And once again, I think it indicated that the long-term expansion is very difficult to justify because of the difficulty or the cost of building new buildings, getting permitted, and all the fat costs that come with it. And even though there's been certainly profits in that industry, we're not seeing any significant expansion. As a matter of fact, if you look at the intentions, you'd certainly indicate that the fair intention looking at lower numbers. Significantly, it could be a little more significant lower numbers as we get into late spring and early summer. And so we did see a little bit of support on Friday off that hog and pig report, but once again, the front end of the market struggled. Still very concerned, but export pace is certainly slower, and the macroeconomics, the outside markets under a lot of pressure throughout the week. That pressured the cattle futures and the hog futures most of the week. Cattle, we ended up being steady on the week at 143 in the south, 145 in the north. Again, no real movement in the cash. We did see a big break to new lows on this move on Thursday, but we rallied the market up and got some triple-digit gains out of it and came off that, but we gave up some ground again on Friday. So certainly lower on the week. We were off the lows. Just a back-and-forth affair. Once again, I think the outside markets, given the livestock sector, the biggest trouble. And also, into the quarter, did see some fund liquidation, I think, this week in both long liquidation in both the cattle and the hog futures. On the week, the October cattle 143.27, down 97 on the week. December cattle down 150, closed at 147.05. October feeders down 417 at 174.17. November feeders 174.62, down 362. Once again, feeders under pressure. We just continue to see a lot of movement out of the drying areas, out of the Kansas on south. Until we see moisture move into those areas, you're going to continue to see cows move and feeders and calves moving, and that's a pressuring influence, no doubt about that. October hogs down 340, 89.22, and the December hog contract closed at 76.22, down 658 on the week.
And that is Darrell Holaday, Country Futures, Frankfort, Kansas. Morning time at countryfutures.com. To remember, trading futures and options involve risk of loss, may not be suitable for all investors. Consider these risks before investing.